building a profitable trading system. This is the fourth video on this series, and in this video in particular, I'm going to cover risk reward. Risk reward, in my opinion, is the bedrock of any profitable trading system. You can have your trading cycle down to a T, like we've spoken about. You can have your strategy down to a T. You can have the best strategy in the game. However, if you don't focus on one of the core principles of actually making money, you're not going to make any money at all. Trading profitability is very similar to business. I've been in business for several years. I got brought up in a business, right? My father had a business growing up. And if you're not optimizing to make profit, you're not going to make any profit at all. You need to really think about what is making you money, what's costing you money, but more importantly, at the end of your trading cycle, have you made any money? And this can quite literally be as simple as, fine, if you have a 1-to-2 risk reward, and I know we all draw it on the charts, and I'm guilty of this too, having the perfect risk reward on the charts, but do you hold that trade to the full take profit? I'm guilty of this. I sometimes lock in gains early. I often do that. Because I'm attached to what is floating at the time. This isn't a very bad thing. However, I want you to have a baseline risk reward by the end of watching this video. Now, for me, it's a 1-to-2. If I know that I come to the market and I risk $100, I need to know at the very, very minimum, if I manually exit this position, I need 200 profit. Very minimum. Because let's do the maths. If I have 10 trades in my trading cycle, which I spoke about in the previous video, out of those 10 trades, if I risk 100 to make 200, and I have a 50% win rate. So that means I win 5 trades, I lose 5 trades. Every time I lose a trade, I lose 100. Every time I win a trade, I win 200. So take the 10 trades, 5 trades losing, that's cost me 500. Take the winning trades, 5 trades winning 200, that's 1,000. Minus the 500, I'm 500 up over the 10 trades. And if you're risking 1% per trade in that situation, that means you're up 5% from 10 trades. And again, you might go through a streak where you win 6 out of the 10. And then the next 10, you might win 4 out of the 10. But the truth is, if you focus on those core principles, even if you won 4 trades out of 10, right? 6 trades you lost would have cost you 600. The 4 trades that you won, right? $200 per trade, that's 800. So net overall, you've still made 200 in that trading cycle. Well, I'll be honest, a big mistake I made and sometimes still make. I'm not yet sitting in front of you preaching that I'm a trading saint, because I'm not, right? I'm human. I make those mistakes too. However, something I do realize and have realized, core principles of building a profitable system is focusing on where the money is. And you can have the best strategy on the charts. You can have your trading cycle that I've explained to you all knuckle down. But if you're not optimizing for profit and you're not focusing on actually making money, what's the point? Right? What is the actual point? So, I want this to be a very basic lesson for you. And I want to remind you that out of 10 trades or out of 20 trades, have you made money? And if the answer is no, then start optimizing for profit. Start having a baseline risk reward that if you want to manually, if you feel that you have to manually close this trade, optimize for profit. Have that baseline risk reward of, okay, fine. If I was risking 1,000, at the very least, I need 2,000. If you're risking 500, at the very, very least, you need 1,000. Because mathematically, you're putting yourself in a position to optimize for profit. Because at the end of that trading cycle, you're likely to be in profit. So the summary of this video is simple, right? Don't focus on the outcome of every single trade, because I understand, I know, speaking from personal experience, you put so much pressure on yourself to win that trade that you don't realize that, fine, if you optimize for profit, meaning as long as you follow the plan, if you follow the plan for the next 10 trades, you will make a profit. That's it. You will make a profit. Yes, you're going to lose trades. That's fine. Right? If you've optimized for profit, that simply means you're going to cut your losses short. You're going to let your winners run. I get it. You're looking at the chart and you're like, oh, wow, that $500 would really mean a lot to me right now. And you want to take it. But at the end of that 10 trade cycle or 20 trade cycle, if you constantly take profit early, what's that doing to your profit optimization? It's ruining it, right? Think about those 5 winning, 5 losing trades I spoke about in the beginning. What if 2 of those winning trades, I took profits early? I took it at 400, 500. I'm ruining my overall cycle profit. So in terms of thinking like a business, you're not optimizing for profit because you're cutting your winners short. And that's the wrong way to do it. So I'm going to keep this video very short, very sweet, but I want to remind you, optimize for profit, have a very basic risk reward mechanism in your mind. So if you're risking 100, don't close that unless you see 200. You might have a runner, like gold today has exploded on Trump tariff news. Trump's imposing 50% tariff on potential tariffs on the Eurozone. He wants to put tariffs on Apple. Gold's had this large rally. If you are in that and that winner happens to make you 1 to 4, 1 to 5, fine. That's the anomaly in the equation. However, as a baseline, to summarize, have a baseline risk reward that from the end of this video going forward, you start optimizing for profit, right? I understand it's emotional. I understand you're attached to the money and the outcome of those trades. However, if you don't start implementing these sort of habits, positive habits now, when I show you a very simple strategy that you can implement by the end of this series, it's not going to matter if you haven't optimized for profit and you haven't focused on the real risk reward. So try and keep that in mind, guys. If you have enjoyed this video, drop a thumbs up, subscribe to the channel, comment down below, and I will personally get back to you. See you on the next video.